worst part of the corrections, I would suggest that rather than exiting the stock, is either you hold up to your your quantity, existing quantity, and when the cycle starts to turn around, so which means that the cyclical downturn reverses, that could be a first time where you can look to start chipping in. Maybe that could happen in the next 3 months, 6 months, or whether the prices go past about the 400 mark. So I think whichever thing comes first, whether the prices starts to reverse or when the cycle starts to reverse for oil chemicals, that could be a time where you can look to average. As of now, I would suggest a hold.
Okay, this one is from Manas Gore, and this one will come to you, Vijay. He's saying that he's currently holding Torrent Power at 503 rupees per share. He's contemplating on switching to Adani Power. So he wants to know whether it's a sensible move at current market price to go ahead and switch from Torrent Power to Adani Power, and fundamentally, which one is a better investment over the next 2 years?
Well, I think that better than both is Tata Power. Somebody wants to be in the power space. I think that Tata Power is one of the best picks. And yes, if somebody is selling right now, I would not recommend that you buy right away. Wait for this correction to get over. This might deepen because we have not seen such inflation in a number of years, and neither has countries like United States. 9% inflation in UK and US is horrendous. And my sense is that we should wait with money in our hand, as I mentioned earlier. So keeping cash is not a bad idea. But yes, better than Adani Power, better than Torrent Power. You can get into Tata Power. If you get a price of around 190, 200, it's a great price to enter.
All right, a lot of our viewers are actually tuning in and wishing us a very happy birthday. Thank you so much to all of our viewers, and do continue with the journey with ET now. The next query, Kunal, is for you. This is from Nand Kumar from Mumbai, and he wants to know if Sera is a good investment to look at current levels. Do you think it's a good buy?
So I think first of all, a bit of an illiquid stock. I think the average volumes are a bit more lesser into this kind of a name. And typically what happens is when you see such kind of illiquid volumes, that the stock is not going to participate as much in a downward trend or in a vicious trend for the market. So that since the participation levels for the investors are low, there's going to be a possibility that the stock may remain a bit aloof of the market correction. So I think this is what exactly is happening with Sera. The volumes have dried down significantly. The prices have stabilized. So price-wise, I think attractive zones 4,000, 4,060 is where the stock is trading right now. So price-wise, very attractive. But the only concern, as I said, is the lack of volumes, and possibly that could lead to the lack of participation, strong participation in the stock whenever the market gets into a rally mode.
Okay, this one is coming in from Ananta Krishnan. He's writing to us from Madurai, and he's saying that he has 50 shares of Tata Elxsi, which he's purchased at 8,325 rupees per share. He wants to know the short and the medium term prospect for this particular counter. What's your take on this one, Vijay? Tata Elxsi did see a massive rally. 8,325 is the buy price for Ananta Krishnan.
Well, I'll talk about the IT industry first. The entire IT pack looks very weak. Look at companies like Wipro, Infosys, even TCS. Although they show some promise someday, but again, they've been consistently, coming down. The reason is that, when do companies invest in their IT infrastructure, or when do companies, invest more in IT and, more in technology whenever they have excess cash on the books? Now, when there are inflationary issues, when there are issues of growth, and there's an issue of a slowdown or a recession in the European countries and the American countries. So I think that IT spends, they take a back seat. Although these are great companies, Tata Elxsi I respect a lot, and I've been holding the stock since 900. But for people who want to get into the stock afresh, I would say that hold your horses for some time, and you'll get great opportunities. And if at all you want to get into IT sector, so I think that TCS and Infosys are the best bets. But right now, I think stay away for some time, and then let the dust settle, and then probably you can get into IT stocks.
All right, so that's the take coming in on the IT space from Vijay. But on that note, we will slip into a break on this edition of Buy Now, Sell Now. Hang in there, Kunal, as well as Vijay. And viewers, here's a multi-bagger idea from Govind Parekh. And this time, he's suggesting the stock that he is actually suggesting for all of our viewers right now is Sundaram Fasteners. And yes, one big stock idea every hour. The next big stock idea will be from Basant Maheshwari, and that will be at 12:30 p.m. But for now, we are slipping into a break on this edition of Buy Now, Sell Now.
Naidu, E.T. turns 13.
Oh, really? Let's wish sir.
Happy birthday, E.T. now.
झुकेगा नहीं.
मेरा नहीं मेरा नहीं मेरा तेरा हैप्पी 13th बर्थडे नाउ
80 now, झुकेगा नहीं.
Chuck the footy.
and it's lucky number 13 at 18 now. Happy anniversary 18 now.
तेरा 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 हैप्पी बर्थडे है.
Cheers to 18 now.
30 cheers to it now.
जन्मदिन मुबारक हो 18 now.
Happy birthday, 80 now. 13 cheers to 80 now. Happy anniversary.
Happy anniversary 18 now.
Happy anniversary, 80 now.
Happy anniversary, 80 now.
Happy anniversary, 80 now.
Happy anniversary, ET now. Here's to next fantastic 50.
Happy birthday, ET now. Welcome to the teens.
We've entered the tweens and happy birthday to ET now and all of my colleagues. And yes, thank you viewers. Yay, we are turning 13, we are entering the teens. Terrific teams, wishing everybody a very happy anniversary and many more applauds for future.
Happy anniversary 18 now. 13 years.
We here at ET Now are committed to serve our viewers by making smart investment decisions. So, wishing ET Now a very happy 13th birthday.
From TV to social, wishing ET now a very happy birthday.
Celebrating 13 years of excellence.
They're going to be not just 13 more, maybe 130 more years of ET Now.
It's Fortune 13 for ET now. 13 successful years and many more to come.
The 13th anniversary of ET Now and it's a Friday. Let's go party hard.
Happy birthday, ET Now. Thank you so much, viewers, for always being with us.
Happy 13th birthday ET now.
Wishing ET now happy 13th anniversary.
It's been 13 long years and guess what? I have been there for all 13. I don't know how many more, but it's been a great journey and wishing everyone on air, off air, everyone behind the scenes a fabulous day and many years ahead.
Happy birthday, dear ET now. Happy birthday, ET now. The 13th card in the suit is the king. That represents principles and values. And in these 13 years, ET now definitely made it to that. So ET now is the king.
13 down and counting.
तेरा मेरा साथ रहे. Happy anniversary ET Now.
See, Nikunj, you're a very seasoned market observer and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, it is the 13th birthday of ET Now. But we have our experts today, Kunal Bothra as well as Vijay Chopra. And let's get going with the query segment where we left. Let's continue from where we left, actually. This one is coming in from Manish, and he's saying that he's bought about 150 shares of Macrotech Developers at a price of 1,134 rupees per share. He wants to know what should he do now, given that what is happening with the markets. He wants to know whether he should hold on to it or sell. What's your take on this one, Kunal?
So, surprisingly, real estate, stocks have been relatively shielded as such in terms of the market correction. So, it tends to have a high beta as compared to rest of the other sectors. Even within that, I think Macrotech Developers or Lodha, I think has done reasonably well. It's still trading very close to its 50 DMA, trading very close to its 200 moving average. I think just about 2 or 3 days back, the stock was on the verge of breaking above its 200 DMA for itself. So, I believe that that's a very decent sign that the stock is outperforming or being more resilient and not participating as high in terms of the downside. So I would suggest a hold on Macrotech Developers. In fact, if the stock breaks out about 1150 mark, on the upside, you can look to even average further.
All right, this next one that I have is coming in from Meet Prem Chandani, and he has a TCS 3200 call option. He's bought it at 25. He wants to know whether he should hold or sell, Kunal.
Well, I would suggest to hold on to at least as of now, because the stock now seems to be getting into a deep oversold territory. You can expect a bounce back, but I don't expect TCS to cross 3,200 for the remaining part of the June series. So possibly if we can shift it to the other month option, that could turn out to be a good trade. Or if you're looking at it from a very short term plane, looking out for bounce back, then I think you can hold on for it at least a couple of days.
Okay, this next query that I have is coming in from Jay Krishnan, and he's saying that he has SRF, which he's purchased at 2,743 rupees per share for the medium term. He wants to know whether he should hold, sell or average, and if the advice is to sell, he wants to know, does it make sense for him to shift his allocation to Mahindra & Mahindra and Infosys? Do you think this strategy makes sense, Vijay? Do you think that he should book out from SRF? Or should he stay with this holding? Vijay, I believe your audio is on mute.
I think, a lot of good quality companies have cracked, but SRF, I think, has the largest market share in the fluorocarbon business. and one of the most respected companies as well. And I think that, you know, a company with great fundamentals and great financials, one should keep on holding. So I would recommend a hold on SRF. Even if it cracks further, I think that it won't be a bad strategy to average out, because, you know, these are the companies, whenever market turns the tides, these companies would come back very, very, very sharply. And SRF has the reputation of coming back sharply whenever it has corrected. So I would recommend a hold on SRF. Don't worry at all, because it's a very strong company, strong cash flow, strong brand, and no point of getting panicked.
All right, this one is coming in from Sudha, and she's asked me to take this query in rapid fire, but Sudha, I will take it right now. She wants to know whether it's advisable to buy Cosmo Films at current market price for a 1-year time frame. And this question she's asked for you, Kunal, and she wants also an entry price if you advise her to actually enter Cosmo Films.
See, I would suggest to wait out for, say, at least another couple of weeks. And the reason for that is, on the weekly charts, the stock is actually forming a bearish head and shoulder pattern. So Cosmo Films is one of the few stocks which has done exceptionally well in the last 2 years. From the 2020-21 lows, the stock, which was almost at 150 odd rupees, went up to almost 1400. So the stock went up to almost 10x, 9x, 10x from those lows. So on its way down, possibly the stock can reverse also quite sharply. So the only concern with the charts is the recent rally in the last 2 years, and then the formation of this bearish head and shoulder pattern, which is a bit intriguing, because this indicates that there could be more selling pressure into this stock in the near to medium term. So at least for a couple of weeks, I would suggest to wait out.
Okay, this query is coming from Rajeshwari. She's writing to us from Chennai, and I will read her query as is. First of all, she's wishing us a happy birthday. Thank you so much, Rajeshwari, and thank you for being part of ET Now's journey. She's saying that her entire portfolio is bleeding now, except Reliance Industries. Still in heavy loss on my metal counters, especially Tata Steel, which she's purchased at an average price of 1,158 rupees per share. She has about 150 shares of Tata Steel. She's saying that I don't know what to do with my holding. Can I average at current levels or book loss and come out, or stay with it? What exactly should she do with this holding in Tata Steel, Kunal? And I'm sure Rajeshwari is not the only one who's perturbed with the movement that the markets have seen currently. A lot of them are actually asking how much more downside left for the markets. But nevertheless, Tata Steel, what should Rajeshwari do?
See, I think specifically for Tata Steel, I would still suggest to hold on or to wait at current levels. Now, I understand, I think my sense is, I think the stock also got adjusted towards the dividend. So that could probably have, added to your, or reduced your cost price, by a good margin from your existing levels of 1150 approximately. I'm assuming you factored, not factored that in. But nevertheless, I think Tata Steel at current levels at 900 odd, I think looks fairly attractive to me on the charts. Now, I understand that metal stocks, the commodity theme, they are under some severe selling pressure on a longer term basis. But then, these are part and parcels. The stock prices, they tend to adjust to these kind of news flows. And if you have a quality stock like Tata Steel, which has managed to withstand many of the cycles up and cycles down for commodity and metals in the last decade and a half, then I believe you've found a good stock in that aspect. So I would suggest a hold on Tata Steel, provided you have a longer term time frame.
All right, this one is coming in from Soumitra, and he wants Happiest Minds. He wants a view on this one, both fundamental as well as technical. But Vijay, I'll come to you. Happiest Mind, how does this particular counter look like? If someone who's not invested, should that person look to invest in it? And if someone is already invested in Happiest Mind, what should their strategy be from here on?
Well, I think that Happiest Mind doesn't have a very happy chart. So I would recommend an exit on rallies. So whenever you get a rally, you get exit out of it. Again, I'm reiterating that if at all you want to be in the tech space, be with the top run companies. So TCS, Infosys is my call for being in the tech space. But again, wait, because companies are not going to spend on IT and IT infrastructure for some time until and unless this inflation monster is tamed. I would say that stay away from technology for some time, and if at all you want to re-enter, get into TCS, Infosys, HCL Tech, Tech Mahindra. These are the top companies, and don't be in the mid-cap space, because mid-cap is anyway there would be a carnage. There has been a carnage. Secondly, most of the IT companies have a very high FII holding, and we are seeing that FIIs have been leaving the country and selling lock, stock and barrel. So I would say that get out on rallies, and even in Happiest Mind, although it's a good company, but I would recommend to be in the top rung companies and not the mid caps.
This one is coming in from Akhil from Delhi. Akhil had written to us yesterday. We could not take it then. So taking his query right now, he's saying that he's purchased a Maharaja battery at an average cost of around 566 rupees per share. He wants to know what's the future prospect of this particular counter and should he add on dips. He already has 350 shares of this one. What's your take on this one, Vijay, for Amara Raja battery?
Complete breakdown on the charts and even fundamentally. I think that all these companies which are into the battery space, whether it's Exide or Amara Raja batteries, they're going to have a torrid time. Reason is because companies like Tata Chemicals, they have done a fantastic job in developing battery technology, and these are primarily EV related batteries. Also, now people are talking about hydrogen, green hydrogen. People are talking about sodium cell batteries. Look at what kind of investments Reliance has done. Adani has done an agreement with Total for hydrogen based technologies for developing batteries. So I think that these lead acid battery companies which are very slow on catching up with the latest EV battery technology, it would primarily take a lot of time for them to catch up with the technology, or they're going to lose market share big time. And the charts are suggesting that just stay out of battery companies, either it's Exide or Amara Raja, or so I won't recommend to stay in battery companies.
All right, so that's the view coming in on the battery companies. But on that note, we are actually totally out of time on the query segment. So thank you so much, Kunal, as well as Vijay, for joining us on the show, giving us your take on the markets, about your fondest memory with ET now and in life in general. And on that note, we'll slip into a break on this edition of Buy Now Sell. Now stay tuned, more on the other side. Don't go anywhere.
Question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional.